Hello everyone, it's Bran back for episode 1 of our new series on weekly passive income generation, trading options on Robinhood, or any broker you'd like as a matter of fact. Remember, this is not financial advice, I'm just a regular guy on YouTube trying to document my journey to hopefully financial freedom while teaching you something along the way. The main reason why I use Robinhood is because options trading is commission free as well as stock trading. And if you'd like to get started in your investing journey, feel free to check out the links down below. Robinhood will give you a free stock when you fund your account, and WeBull will actually give you 4 free stocks. Alright, let's get into today's recap. Today is November 30th of 2020, and I'm recording this right at market close. We'll go together over which trades I took and what's my plan into the rest of the week. So a little reminder of the strategy we're using here. We're trying to use blocks of 100 shares we own and sell losing lottery tickets, bets, or in our case, call options to optimistic bulls, hoping for the underlying stock to remain below the specific price that we stated in the call option we sold. Here is my trade history for the day. As you can see, my canceled orders are showing as well as my filled orders, which helps me explain to you my thought process throughout the day. As you can see, I did not buy a single stock today. The only thing I did was selling call options expiring either this Friday, so Friday the 4th, or Friday the 18th, so 3 weeks from now. First of all, we can see here the first trade I took, okay, this was from last week, actually call options that I bought and sold for profit. Yeah, nice little breakout play on Aphria, I believe. So a pot stock play, and yeah, went out just fine. First trade I took was Mara, so Marathon Patent Group, another Bitcoin miner actually, who I bought back in August, I believe, around 260 something, and very similar to Riot, they follow Bitcoin to a certain degree, but it's a smaller market cap, which makes it a lot more subject to price manipulation. So it will follow Bitcoin, but not as closely. It can spike up very high to the upside, as well as stay bearish for longer periods of time compared to Riot, which is a lot more stable follower of Bitcoin. So what happened on Marathon Patent Group? I sold a $9 covered call expiring December the 18th for $45. What does that mean? So here, let's go on TradingView. Here's Marathon Patent Group. Let's just hide Bitcoin. We don't really need it. What happened this morning? And when did I take the trade? Okay, so as you probably know, Bitcoin broke out big time, testing all-time highs around 10 a.m., 1980, 800 something, as you can see here, and then is currently consolidating, forming some sort of a descending triangle here, and which is probably going to explode or consolidate a little higher, basically work stair steps towards a new all-time high. This is my prediction for the week. This is just my opinion. So considering this information, why did I choose to take that trade with Marathon Patent Group? So I took the trade around here, 10:30, on that breakout to the upside on this candle on the 30-minute time frame. If we go to the 5-minute chart, this will give us a closer look. Basically right here, and then it broke out. So my thought process was Bitcoin is pumping, Marathon will most likely keep going up, but will not reach $9 before December 18th. These things take time. This is a very small cap. It is very likely that it gets shorted by short sellers trying to make profit on the downside. So my thought process was selling a covered call on the spike for $45. How did the trade go so far? Here it is. All right. So I took the trade around here, waiting for that spike. I could have taken it here, cashing in a lot more premium in the process, but this is what it is. The goal is to stay consistent, not FOMO on either side, either on the long side or on the short side. So here I placed the trade here for $45. So far, I'm losing money since the call option gained value instead of shrinking, which is what I want. All right. I still think that I have time to get my money back, basically to crush this contract into December the 18th. All right. Next. For some reason, okay, AQB. Very interesting. This is a stock I've been looking at for a long time. Aquabounty Technology, ticker symbol AQB, which is basically a company who has been designing for 20 plus years a technology allowing them to grow salmon indoor, so basically away from ocean farms, lake farms, and things like that, which is really bad for the environment, and allowing them to grow the salmon a lot faster than regular salmon. So, okay, you can see this the way you want. The way I see it is ARK Invest has been adding hundreds of thousands of shares for the last few months, and it was poised for a breakout. If you look at the 3-month chart, we can look on TradingView, which I prefer. You see this consolidation until it broke out. I'm not sure what the news was today, but regardless of that, I saw the opportunity. I own 100 shares of this stock for this very specific reason, trying to sell calls, covered calls on a spike. So the trade I took, this one is a lot better actually than the Marathon Patent Group. Yeah, I exactly sold it for $70 on this exact spike. Let's see. See this beautiful candle. This is when my order got filled. So 70 with a strike price of 7.5. So I basically make money all the way up until 8.2, which is the strike price plus the price of the premium. If AQB goes over 8.2, this is where I start technically losing money on this specific play. Okay, I'm still up on the stock, which I bought a lot lower, but this specific play will be losing me money if I take it all the way through expiration date. All right. Next, I believe it was Sorrento Therapeutics, which had really positive news last week with a contract with DARPA. So Sorrento Therapeutics, ticker symbol SRNE, is a Rona stock, basically designing antibody drugs and a vaccine to cure this pandemic. So what happened last week on this news? Very insignificant spike, which I wasn't surprised. Sorrento has been on a general downtrend for the last few months. It's been quite painful for Sorrento longs. I hold a bag of Sorrento that I bought around, I believe here, at an average of 860 or something. And same concept. I identified it as a volatile stock with high implied volatility, meaning that options in generals for this specific stock will be more expensive than they should be. So, which is ideal to sell covered calls on it. So I've been successfully milking the stock for the past few months, and recently it really has been beaten down, and now it's on the comeback. As you see, this previous long-lasted line of support has been broken, and then we're back above it. So my goal is to simply keep milking the stock and make it as much money for me as possible, all the way until these 100 shares that I paid around 860, so 860 bucks, will eventually be free, because this stock will have paid itself. Basically, rent covered the purchase of the house. So I took this trade here. Obviously, not knowing when Sorrento will stop. So I took the trade, placing a limit order on a covered call for Sorrento at a strike price, fairly aggressive actually, of 8.5. So the closest strike price, actually, hoping for this spike to get crushed once again. I'm at the point where I always try and apply this strategy to companies I strongly believe in, and I'm bullish on the long term. But Sorrento has been beaten down so bad that at that point, if I have to sell for the same price, I bought them, and just consider the profit into the premium I made along the way. I'm totally fine with that. I still will try and crush this contract and buy it back lower, because yes, this strategy is you sell contracts hoping for these options to get crushed, but you don't have to wait until expiration. If I see an opportunity on the downside to buy back my contracts for a lower price, I will do it. And who knows, I can maybe sell another contract for the same expiration date in the same week. So crush contracts twice in the same week. It's totally doable. I've done it in the past, especially with Sorrento Therapeutics. So yeah, my goal is, I sold a contract for the 8.5 strike price, which is still fairly far from today's price action. We can see that it has been acting for a while, even 8.4 as strong resistance. And I'm not sure we'll blast through it into Friday. So yeah. And lastly, my beloved Riot blockchain, which is always at the top of my mind when it comes to selling covered calls weekly. So what happened today? I basically missed the first spike of the day. I was actually in the shower, not thinking that this beautiful spike would happen. So we actually hit 8.9, I believe, 8.10. High of day, 8.10, beautiful. And then Bitcoin found this new all-time high around here. I'm going to put Bitcoin back on the chart, try and make it to scale. Beautiful. So this spike coincided to five or 10 minutes approximate to the new Bitcoin 52-week high, beautiful new high, and then consolidating all the way back here, then new Elliott wave, and we're back on the uptrend. When did I get filled? On 3 different occasions, actually. I sold my calls as slowly as possible, feeling that, because when you hear, you're hoping, when you're selling covered call, you are a short-term bear, meaning you do not want the stock to go too far up, or if it does, you don't want it to happen too quick, because the price of these lottery tickets, these call options, needs time to follow, because people need to buy and sell these call options for their price to fluctuate. So I sold the first one here, I believe, for a very conservative $45 in premium. First trade, yes. Thinking, all right, I missed the first spike. I could have caught it, let's say, here, cashed in 60, 65. Kind of FOMOing on the short side, and then I kept looking at the chart, feeling that eventually we're still on an uptrend. I'm gonna take it slow, so I'm just going to place one and see how far can we go. And then I placed 2 more around 55, and then I canceled one, feeling that I could milk one more. Oh yeah, here. I placed one at 45, canceled the second one at 50, placed it back at 55, and then eventually placed the third one at 60. So this is a beautiful day. Total is 70, yeah, roughly $300. So my goal into the rest of the week is obviously follow closely the price actions of these 4 companies, sorry, and hopefully try and buy these contracts as low as possible and also as early as possible, because if I buy back my contracts, I can sell an other call option later with a later expiration or for the same expiration date. And so yeah, thank you for watching this video. I wanted to bring your attention to, I think, what I consider to be one of probably the best strategy to grow a small account without having to buy some stock and then sell for profit, reducing your overall amount of equity you own in a company. So this is a strategy that I like. This way I can keep the shares I own and just slowly nibbling on shares left and right. Sometimes a very large cap, I will reward myself when I have a great week into 1 share of Apple, or 1/10 of Google, or 1/10 of Amazon. See, just to make sure these profits I made are locked into a safe long-term investment. Alright, thank you so much for watching. If you went on and gained value from watching this video, feel free to drop a like on the video and subscribe for more content like this. And I'll see you in the next one. Bye-bye.